Good morning, active traders. Good morning, and welcome to this week's broadcast of Trading Week Ahead. Great to see so many of you here. Big turnout as usual, and we'll be going over some strategies and tips and techniques. Be able to answer a couple of questions as well. But first, as always, all information is for educational use only, not making advice about what to buy, sell, or hold. And by watching this, you agree to not make actual trades. It's all for learning in a safe demo account use only. Our quote of the week comes from Henry Ford, and I miss working for Ford Motor Company as a statistician back in the early 90s and a quality engineer. The quote of the week is, if everyone is moving forward, if all of us are moving forward together, then success should take care of itself. And building a community of active traders intelligently is what I've been doing the last 20 years here at Day Trading University and Trade Mastery and the rest of my network or website. So that's our quote of the week from Henry Ford. Great company to work for, by the way. Our coaching tip of the week is to look for price action, and this is the first in a series that we'll be doing for you. Price action tips part 1 is to learn different ranges and slopes. By that I mean, what's the number of points of trading range that instrument has, what's the profit potential, what's the slope of the breakout line, and how do you make a trading plan designed to capitalize on that. I've got a couple of more tips coming up for my Swing Scans members later. By trading ranges, for example, I mean something like GDS has a 20-point trading range. This is a 15-day chart, 20-point range from 20 up to 44, which is outstanding. It's got over 20 points of range. This would be for experienced traders only, but if I can get a swing trade off for 5 points, or day trade off for $1.25 or whatever, or go short on a drop under the support area, that trading range makes a lot more sense to trade than trading, say, a $4 or $5 stock with a very narrow range. What you're looking for are charts with big profit potential, and you play the field with tight stops. Big ranges make a lot of sense. But let's start off with a quick look at our S&P. The S&P dropped yesterday. If we kind of take a step back to the 90-day candlestick chart, you can see resistance is up here near 2860. You got a bearish upper shadow here, got a little baby shooting star. Isn't that cute? Our long trigger is going to be 2868. That's going to be R1. R1, my official R1 professional trigger, is 2868. So we want to kind of hold off on going long in your instruments, or scaling in, or buying calls or selling puts, or whatever you're doing with your options trades or the underlines, unless we get over 2868 in the S&P for resistance 1. S1 support level is going to be 2817, and that's right under this support line here. So 2817 is going to be S1. See, we had a little bullish engulfing here. It ran up, little baby melted candles, and it gave it right back again. So we're in a directional uptrend still, but because of the pullback, the give back Thursday and Friday, you really got to be careful in your trades. Let's take a look at some of the best charts out there. We'll start off with the recent issue, BE. This guy, I told you it'd be worth a look earlier, and you can see it ran all the way up from 19 to 30 before pulling back. Notice, please, the whole number or decade value resistance. That's why you may have seen my article in Technical Analysis of Stocks and Commodities, in which I brilliantly and correctly told you guys, don't ever buy anything with a 9 in it. Sell 100% anything with the number 9 in it, because it looks expensive. And I'm not just cherry picking. I just saw that for the first time in this chart. It just look over a random 100 charts, and you'll see, and test it out yourself. Selling with a 9 in it makes sense. So anyway, I would not be looking at a long in this guy unless it breaks north of 30.5. But hey, it's in an uptrend. We'll see where it goes. That's BE. Next up, Hertz has been driving up off the freeway nicely. It's got a gap continuation with a mean reversion back on Tuesday. It gapped up to 1680, ran up to the 20. And again, there you go. Does everybody see why selling the 9s makes sense? I just saw that in both of these charts. It works so consistently, so potentially so consistently. So you sell things with 9s in them. So if you're swing trading from back here, selling at 19 would have been a brilliant, smart idea. Okay, that's a rider downer. I know you folks are the sharp pencils in the bunch. We got smart traders here. Sell stuff with 9s in it. You can always rebuy a new high. 50 cents over the decade value, say 20.5, would make sense in Hertz. Mean reversion, right? It gapped up, it ran up, it pulled back down to 50%, half, and then bounced. I used to call this an ABC wave pattern, or a 1, 2, 3 pattern. You get a gap or breakout, pulls back down around half, then pivots and resumes its initial uptrend. In this case, that was a long bias pattern. You can see that. Anyway, that tip alone is worth tuning in for. These kind of tips I develop because I test with millions of dollars of real money trades I've traded in my life. I test all this stuff out for you guys so you don't have to, right? I take point. I've got your 12, so I take care of you guys. Anyway, next up to bat, we've got Roku. A really nice play. Also, that one's good for day trading next week as well. We covered this in our live room successfully back on the 9th. That was one of our plays of the day, was the Roku Breakout, and it ran up nicely from a base of around 51.5, 52, all the way up to 58. Ran up to 60, just under 61. So Roku, a nice momentum gapper as well. So I'm looking to buy this at new highs over, say, 61.50. By the way, keep it simple as a swing trader. I like to just add 50 cents to a whole number because it doesn't really matter if you buy at 61.20 or 61.70. There's no magic to that. The magic is the right chart pattern with volatility, and avoid getting screwed, avoid getting effed over by false breakouts. So a really stupid place to buy this would be what? 60.5. Because something breaks obvious horizontal resistance, thou shalt not trade it unless you want to get your trading account blown up and your head handed to you in the markets. Having learned that by blowing up 2 trading accounts back in the 90s, I learned that the hard way. Bum, 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 bum. So you wait for a false breakout filter above the obvious dumb money trigger and be patient there. Be patient, grasshopper. Our daily chart, you can see we got a bearish upper shadow on top of that. So that's another bearish reversal pattern. This is not a shooting star, I don't believe, because it's not twice the height of the whole real body. But the point is, it's a bearish upper shadow. So for that reason, the data points that comprise that candle would be a bearish cup pattern, right? With an open here, an arc up here, and then a close down here. If you're to plot out visually the price action point. So that's a bearish recent, even though it's green and it ended the day up from its open, it's still slightly bearish. So the earliest we'd go long would be up over 61.50, right? Same thing if you look at, say, the Hertz chart. You can see it's parked right under 200 simple moving average line with a bearish upper shadow there. So we wait instead for new breakout up at new highs. And last but not least, this GDS chart. It went from 46 down to 20, and then it did a mean reversion pivot here. The main reason that I brought this chart to your attention is because of the point range. Visually, I want you to spend a lot more time looking at the point range on the right side of the chart in addition to the underlying chart pattern. Nice breakouts and gap continuations are all well and fine, but only if the point range justifies an actual trade in it. So you need to find instruments that have wide ranges. Look at the range in this guy, 20 to 45 or so, 25-point range. So I'm looking to trade this guy if it gets over, say, 33.5. Remember, we sell 9. So if I can get near 39, I kind of buy wholesale and sell retail. Buy 33.5, sell 38.5, 39. I made my nut. I'm a happy camper. Or if I go short, if I go short at, say, where did I short this puppy? Around 26.50 and cover 21 right above the whole number. That would be a good directional play. Either way, does everyone see, are you with me on this? Do you see the point range profit potential in the chart either to the upside or the downside? That's critically important that you start paying attention to. That's why I'm not a fan of $2 pop and drop stocks. You got to play like some kid on a video game trading thousands of shares for a little tiny 20-cent nut. I think that's a stupid way to trade, and that's almost guaranteed to blow up your trading account. Instead, you want to trade charts with wide directional volatility and wide point ranges that actually make sense. Whether it's long or short, I don't care. I just care, is it worth trading? Is the juice there? Do I have enough points to make my nut as a trader? Can I make the money as a trader? All right. From a commodity standpoint, I don't see any specific strength in any of the commodity markets that's beating the market significantly. I do, other than I've been calling dust long for you guys the last couple of weeks. That's the inverse gold ETF. It goes up when the price of gold goes down. And sure enough, I called it long for you guys a couple of weeks ago. So congratulations if you profited from that knowledge. It's continuing to move up and it looks healthy. So we'll see if it breaks north of 31. See a question from Marcelo. My charts look crisp, sharp resolution wise. Did I do anything special? No. It's maybe it's the internet connection is better for you. But yeah, appreciate that. Yeah, a good point from Andy about Hertz recent earnings too. And thanks, Trey. Trader saying Roku is featured on cable TV. Yeah, and a good point from Marcelo. I'm just reading off some of the comments. Yeah, Roku didn't do a mean reversion pivot. It just kept running, right? So that's good. We like momentum runners that attract new buyers. Remember, the trick as a trader is to play wide, not deep. It's to throw a lot of darts at the market on small, conservative size. So you're not going to be able to take $1,000 stop loss because you're not trading stocks or other instruments with that much size on the front end where it's going to bite you. You want to take real small stops when you're wrong and feed the winners, starve the losers, add to winning trades, subtract out of or scale out of the ones that don't work out, and play the field intelligently in a way that makes sense. Or you can explain to your family why you made so much money. It's because, well, I listened and I actually learned how to do this the right way instead of the boneheaded magic chart pattern, thousands of shares, let's try and hope it works out way. It's much more about the math and the numbers and risk management and risk tolerance than it is any individual chart. It's about playing the field. Let's see what else we have here for you. For our currency traders, the US dollar to the Canadian dollar, that's the only of the currency charts that I trade, the Forex charts that I trade or follow, that's doing a really nice high sharp angle breakout recently. So just as a side note for any of you who are Forex traders, do consider this one, the US dollar to the Canadian dollar up in new highs. And for a specific entry trigger for this and two others updated each week, be sure to join the forexvideos.com site that I co-produce with my colleague Peter Bain from Forex Mentor. But anyway, that's the Forex pick of the week is the US dollar to the Canadian dollar. It's up nicely. What else do we have? I wanted to mention that Swing Scans has a new look. I'm going to look at a couple more charts in just a minute. But if you're not yet a member of Swing Scans, everybody should be a member of Swing Scans if you trade stocks, right? Whether you're an options trader that's looking for good weekly option, potential charts that make sense to follow, whether you're selling calls or buying puts or doing your credits or debit spreads or iron condors or butterflies or whatever you're doing, the feeding ground, the right kind of charts that have great directional volatility is my specialty. Or if you're trading the underlying, like I like to do a lot. Swing Scans for overnight up to 2-week or 3-week holds is ideal for those of you who trade stocks and ETFs. You get weekly webinars plus downloadable video plus my top 10 picks, specific entry triggers, and much more. If you're a day trader, consider tradingopen.com. If you trade small caps, go to my small cap scans website. Or if you want a daily watch list and kind of do it yourself, you can do chart scans. So offer lots of different services for the world's traders, and it's neat to see so many of you here. There's a video of me telling you more about it. Winner of the week, Pfizer continues to do reasonably good and actually prove a trade. What a novel idea. I even hired some actors and actresses to tell you guys why does learning from a real trader with P&L proof matter. I think it does matter. Anyone can talk about charts. That doesn't make them a real money trader, right? There's a difference between a chart talker and a trader who trades with live capital. A big difference. So, and more importantly, I like to give you the reasons why behind the entries and the exits and the picks, explained in a very intelligent, action-oriented, focused way. So, anyway, enough of that. Let's get back to business here. What else do we have going on? Do all of you see the importance of trading ranges? I hope that helps. You know, because it may be as tempting as it may be to trade cheap stocks. You know, like this. Does everybody see why this would be a completely stupid chart to trade? I just randomly pulled this up off the leaderboard. HCFT, a $3 stock. Ooh, it's got a 20-cent range. Well, so if you had traded, you'd have had to trade like 10,000 shares and gotten it right within a nickel. That would be a stupid chart to trade, just to be crystal frickin' clear. Let's pick another one. Ruby. That one would be a bad chart to trade because the trading ranges, even if you got a piece of it, it only runs 10, 20 cents. So you'd have to be laser-like right, which you're not going to be consistently, and you have to trade really large share size, which is just going to bite you in the butt with big stop losses. So don't trade cheap charts unless they have some consistent directional volatility. That one's okay. PLNT. Now you can find charts by looking on your leaderboard scan and seeing which ones have good gap continuations with the point range and the volume to support the trade in an intelligent, focused way that actually makes sense. So as you're looking for trade setups each week, do give preference to charts with big ranges or gaps or good breakouts or gap continuations the day or the week or so after the trade. Let's see, any other questions? Let me know.